Hi, welcome to the Uninet Champions Conference. My name is Pete Rigoni, and I'm going to be co-presenting with my colleague Andy Scalise, as well as John Klopauchi from Uninet, and we're going to be talking about obtaining a clean DCAA accounting system certification. The objectives today are to, one, learn what the DCAA accounting system certification entails and what to expect. I'm sure many people here in the audience have heard about it, but haven't really gone through it, and this will be a good way for them to at least get a glimpse into what the DCAA certification is like. Here to clear up some common misconceptions as to what constitutes a DCAA certified accounting system. Many people tell me, oh, as long as I got the right accounting system, yeah, I'm certified, right? And it's not just about the accounting system. It's everything surrounding the accounting system. We're going to observe the procedures performed in an accounting system certification engagement and how to self-audit in advance. And we're going to recognize your role and the role of Uninet in obtaining a clean accounting system certification. So what is the DCAA accounting system certification? It's formerly the Form SF 1408 pre-award survey of prospective contractor accounting system. A copy of this should be available to you in PDF. If not, it will be available on download. You should also be familiar with the DCAM Chapter 5, Section 200. That is the DCAA Certified Audit Manual, and the accounting system certification is typically done by DCAA, but independent CPA firms like us can do that. The goal is to determine whether the accounting system is able to properly accumulate costs as required under the FAS or under the FAR or CAS for a government contract. And that's the whole point of the whole certification is when you're a contractor, you have to be able to allocate and segregate your costs properly between direct and indirect. It's referred informally as an accounting system review, but under the technical standards of the ICPA, it's an examination engagement. So who performs the examination engagement? As I mentioned before, independent CPAs like SC&H. And when can we do that work? Well, when you're bidding to be a prime as a sub, or you're bidding to a prime as a subcontractor and they've requested it. When bidding on non-DoD contracts, so the civilian agencies. When you want the comfort of passing the examination before the DCA comes in. And you don't have to do a full exam. We could do what's called a mock or gap analysis, where we could come in, or any CPA firm can come in and do an assessment, and it won't be a full-blown testing, but more of a summary review of what you have in place and provide any guidance or suggestions on how to correct something if you notice anything before doing the formal exam. When the DCA refuses to accept the engagement or significant delay in starting, then the contracting officer will accept the independent CPA's report. We have been seeing it in many RFPs now where they're allowing for independent third-party firms to provide the certification. I noticed this most recently in the CIOSP3 ramp up. They put that in there, and they wanted all bidders to be able to have to state that they had a certified accounting system. When does the DCA do it? Well, when bidding as a prime on a DoD contract, when bidding as a sub on DoD contracts, and procurement requires DCAA only certification. And it has to be requested at the contracting officer level. So it's when petitioned by another agency and DCAA accepts the engagement. The issue with the DCAA, and we'll talk about this a little later on, is they're not timely, as everyone knows. The good thing about CPA firms is we can do that, but we'll get into that a little bit later. And I'll throw it out to the audience at any time. Feel free to jump in with questions. We will have Q&A at the back end, but we believe this to be interactive, and as things come up and you have a question about it, don't hesitate to throw your hand up and ask. So what are the pros and cons of using an independent CPA firm? Well, the pros, like I mentioned, much more timely. We can pretty much knock it out in a couple weeks, sometimes sooner, sometimes longer, just depending on if we find any issues. Less adversarial, feel like we're not the government, because we're not, and we want to be helpful. And it's done at your request. So the DCAA does not accept requests from contractors. Like I mentioned, the contracting officer has to request that. The cons, well, may not be valid for certain future contract bids, and the contractor pays for the examination, and those fees range depending on the size of the company, the complexity, number of contracts, number of cost pools. But I know we try to be fair and reasonable when we're bidding on something like that ourselves. So what will you need? Policies and procedures are the biggest item, and that's where we get into the misconception. People think, as long as I've got an accounting system that can do this, that's why I'm going to Uninet, right? Unit's a great accounting system. It does everything automatically. I push a button and it's done. Well, as great as Uninet is, and that's why you're all here, you also have to have policies and procedures that are written. And it has to, those procedures have to describe the accounting system in detail, and any of the other systems or software that you use, as well as manual processes. So if you're having HRIS, integrated payroll, outside time and expense, outside of a system, and you have to describe what those processes are. As I mentioned, it's manual controls, supervision review of work papers, automated and outsourced functions, accounting policies over your cash receipts, cash disbursements, your budgeting, even fixed assets and depreciation, your purchasing, your billing, your contract management, payroll, your indirect rate, cost pool calculations, and your financial reporting. All of those are part of the accounting system, and a lot of that is done manually. The good thing about a system such as Uninet, most of this can be done automatically or automated to some extent. Key items to focus on as well is HR policies, timekeeping, expense reimbursement, job design, your hiring, your termination policies, severance, bonuses, pay increases, paid time off. Most of those are captured in an employee manual, but in some instances, they're also integrated into a formal accounting policies and procedures manual. And my colleague Andy and I say, practice what you preach. You know how many times we go out there and their policies say one thing, but in actuality, we see they're not really following it. And that is going to be a huge red flag and a ding on you. So what are the things you'll need? As I mentioned, you're going to have the draft form 1408, and the steps on those really outline what we're going to be doing for you today, and description of process for unallowable costs. We usually provide, at SC&H, we actually provide a questionnaire that details the FAR 31 unallowable costs, because we need to get an understanding, does the contractor understand what are the unallowable costs? And there are some that are some gray areas and some bright lines, like charitable contributions or entertainment. Rule of thumb, if it's fun, it's unallowable. And then you're going to have access to all accounting system reports, employee personnel files, payroll records, as well as contract and billing files, because we take a sample of transactions and run them through the entire system, from the origination of the transaction all the way to the reporting. And I'm going to turn it over to my colleague, John, and he can walk through some of the intricacies and key facets of Uninet's requirements for DCAA compliance.
Absolutely. Thanks, Pete. So in setting up our system initially, when you set up with your Uninet consultant, you'll be setting up DCAA compliance as well. And the way we'll be doing that is going into our system in our property section and requiring approvers to review details, disabling the ability for users to self-approve, disable the ability for managers to edit timesheets, for end users to delete timesheets, enable the audit timesheet trail, requiring timesheet approval, and require approval for expenses. And we'll note that these areas are generally within a time and expense realm of Uninet. And you can get to these DCAA compliance items that we do set up for you in the system should you require DCAA compliance here at the Knowledge Center. I'll just go into the system real quick and identify where those are. So we're just going to go into admin, and we're going to go into property section. So the first item was, I believe, to enable admins to enable the audit trail, include other audit trail reasons. In our approvals and defaults, we're going to require timesheet approval. And you'll notice here we're requiring user review because in this case we're allowing admins to edit timesheets, but we also know from a DCAA compliance perspective, if that is the case, the user has to be able to go back and review it. We can prove that within the system. Same thing for our expenses. We're going to have our administrators edit the expense reports, but again, we're going to have our users review those. We are requiring approval for expenses. And the other items that we had noted before in our slide are also configured within the system as well. Okay, I'll turn it back over to Pete.
Thanks, John. And at this point, I'm going to turn it over to my colleague, Andy Scalise. So Andy has works with me closely on these DCAA accounting system audits. He's the guy out there running point and has performed many of these on a variety of systems, including Uninet. So I'm going to turn it over to you, Andrew.
Thank you very much, Pete. So now that we've kind of covered the basics of what the system review is and how to be prepared for it, it's time to actually complete the accounting system examination. And the first part of any audit type process is planning the audit. And the first thing that we do for that as an auditor is complete a risk assessment on the system. So a risk assessment on an accounting systems examination: what kind of accounting system do you have? Do your accounting personnel know how to use the system and frankly know accounting? And do you have good internal controls, policies, and procedures in place? And it's more than just having them in place. As Pete said before, it's also, do you actually practice breach? Can you prove to me that you do what you say that you do? And we will adjust our procedures for the examination based on the level of risk that we assess. So obviously, something that we consider to be very high risk, we're going to spend a lot more time testing those areas. And if it's low risk, we're going to say trust but verify. So we may pick a sample, one small item or two, but in general, if it's low risk, we're pretty confident that you're doing the right thing. So some of the factors that are high, your accounting system is QuickBooks or Excel or other manual type accounting system. If you have internal payroll where there is no independent third-party source to agree information to. If you have a weak timekeeping process, people on manual timesheets, especially when you have locations all around the country, it can be hard to get those done in time, and those are things that we see as high risk. My favorite line from clients is, oh, my CEO and my CFO, they're all indirect. They don't fill out timesheets because they don't need to. Well, yes, they do. And then, of course, you have your employees who don't do a very good job of providing receipts or other support for their incurred expenses on time. Conversely, obviously, strong internal controls, using a high-level accounting system like a Uninet, and having outsourced payroll with a recognized payroll provider, reputable third party is very helpful and lowers the risk on one of these audits. So what we're going to do to start off here is kind of go down the list one by one of the internal controls that we would look for as part of our risk assessment process. And for the ones that aren't manual, John, I'm going to ask you to demonstrate how it would be done. So the first one is probably the most obvious: approval of time entry.
Okay. Thanks, Andy. And what I'm going to demonstrate for that is I'm going to run a few different reports. The first report I'm going to run is a reference report. So I'm just going to go into our report section and run a reference report. And the reference report I'm going to run is our approval group details. And by running this report, we can show our auditor that we have approval groups set up for time submitters and expense submitters, and certain people would be approving those time and expense reports depending on whose approval group you would be assigned to. At the same point, we also have reference reports to show that we also do project reviews as well. So we're approving project expenses and time sheets on the project level as well as at the manager level. So in this case, our person, Betty, business development Betty, she's a project approver for these projects. So any timesheet that would come through on that project, she would have the ability and has the ability and must review that timesheet and approve that timesheet. Now also, show that we do what we preach, let's just take a look at a timesheet that has been completed already. And I just clicked into to one person and their timesheets, and we can show for this timesheet the approval history that went in. We can show that someone had put in a timesheet in use on March 1st of 2018. It was submitted, it was completed, that means the final reviews were done, and it was locked for the system. So in all intents and efforts, this timesheet has been fully approved and locked for the system, and the employee cannot go back in and review that timesheet or make changes to that timesheet based upon it being locked right now. Okay, Andy, go back to you.
And then the next would be an expense report.
Okay, and these same expense report groups would follow here. And again, I'm just going to go into a person again, and I'll just find someone who maybe has an expense. So I just went to my people list, and we'll go into George Bush for a second here. And of course, he has no expense reports. Well, how about we go into Frank Controller here, and he has completed expense reports. So we're going to click into one of those completed expense reports right here, number 151, and we can see that is for this certain project, which is a project in our billable project schema. It's on task 1, and it's rent a car for travel. And we can show here that Frank had submitted his expense report on March 5th. Fran, the CFO manager, approved it. Bob, the customer, approved it because we're having our customer approve our expense reports. And also, they were locked and extracted by Frank Controller. So we know that this expense report has been fully completed within the system and cannot be adjusted at any time after the process.
Thank you. And can you show us kind of user control access to the system, login, password stuff?
Absolutely. So we know that Uninet is a role-based system. And one thing I would demonstrate to DCAA that within the roles dictate what someone can and cannot do within the system. It gives them access to certain things within the system. So what I would demonstrate first is to go to the Knowledge Center, and we'll kind of look up roles in the Knowledge Center and give them a little primer as to what those roles look like. And this is actually a screenshot of a person profile. And we can see from the person profile here, this person is an expense user, timesheet user, and a resource planner. And these are the roles that person has been given within the system. However, DCAA is going to want to know what those roles actually mean. So I would then give them a copy or point them here to the quick guide, set up quick guide for roles. And this gives a good idea of the role type, the name of the role, and the description of the roles, what these roles can and cannot do for the person. We can also, if we went into our person profile for someone, I'll just go into the last person that's here. We can also show DCAA that for any of these roles, if we hover over this information button, it'll give us a little blurb as to what can and cannot be done, or can be done by checking this box. And one thing DCAA would probably want to do at this point would go back and maybe sample a few different people. Now, one thing we can do as well is show DCAA a list of all employees and the roles that they have within the system, which would probably be most helpful for them in identifying who they might want to check or look into and see what access they would have in the system, what they could not and could do within the system.
Thank you, John. I think that you can see that Uninet certainly has the ability to have strong internal controls, and certainly, John, in the system you have here, those controls are implemented pretty well. The other items that we look for typically are of a more manual nature: approval of vendor invoices, approval of payroll, any kind of personnel activity, having that approval, and approval of customer billing, really just to prove that there's a second set of eyes on the bill before it goes out to the customer.
Absolutely. So again, within our roles, within Uninet, you'll see certain roles. You'll see an AP poster role. This is the person who can post our vendor invoices. So we have someone putting in the invoice. We have someone else posting the invoice and reviewing it before they post it. The same with our AR, our billings. You have a billing manager who can actually do the invoice itself and set up the invoice for approval for the customer and send that to the customer. And also, for any of our other items, these are the roles that obviously within the system that they would be able to do those things. In the course of a payroll entry, let's say payroll entry is coming back from ADP or from Paychex, you would have a GL user potentially putting that entry in, and then a GL poster being the person reviewing the supporting documentation and making that posting into the system.
Thank you. All right, so now it's time to actually get started into the SF1408. And so what we're going to do here is step-by-step, question by question, we're going to walk through the Uninet system and complete the SF1408 essentially together. Thankfully, if you are getting this accounting system examination at home, you don't have to worry about being in the spotlight. But John, it's going to be up to you.
Okay. So the first item is,
is the accounting designed in accordance with GAAP?
Yes, it is.
How are costs and vendor how are costs related to vendor invoices recorded? When are billings and revenues recognized? And then how do we depreciate fixed assets, which again is more of a manual process, but how are those costs captured in the right period?
Okay, so we know from experience with Uninet, and we could demonstrate this to DCAA and talk to them about that, that Uninet is a real-time accounting system. So our labor costs are recorded as our timesheets are input into the system. So to show that, what I'm going to do here is just run a PSR for one project, and this project has no time on it right now. We can see for this period. And what I'm going to do then is go into a timesheet for someone that I know is assigned to this project, which is myself, Frank Controller, and I'm going to go into my current timesheet, and I'm going to put an entry in there just to show how quickly that this entry will show up on there on our PSR and in our system. So I'll just put 10 hours on the 16th of April. I'm going to save that timesheet, and this is what I'll be doing on a normal daily basis. As you can tell, I've had entries in and out, and the system is asking for a time. So I will go then into my PSR and refresh that report. Here we can see our direct labor cost of $750 came in. But knowing DCAA, they will want to, and our audit would want to actually identify, well, who does that cost belong to? So I'm just going to go into labor details right here. And we can see here, here's Frank Controller. Here's the labor company site that he charged to for our project, Big Data. And it's the 10 hours that he has charged to that on that timesheet. Okay, and moving along, when our costs related to vendor invoices recorded, these are recorded when reviewed and posted by an AP poster. So in the case of an AP invoice, I'll just shoot over to the AP section here. We'll look at a quick vendor invoice. And I will just look at all vendor invoices posted for the period. And we can see that this item here, this $300,000 invoice for highway software, has been posted into the system. What I'll do now is go over onto our general ledger, and we'll take a look at that. I believe that is in our direct other costs account in April, and we can see it's on task 8, and it's for $300,000. So I'm just going to run a general ledger details report for April of 2018. And we'll be able to see in our direct account that item should be there. Okay. Oh, and actually when customer billings and revenues are recorded, that happens every monthly during our billing and revenue post process. And basically that happens as the billing manager will put an invoice together, and it would be reviewed either by the project manager or by our customer or by our internal staff, depending on our policies and procedures. And then we would post that invoice into our general ledger. For fixed assets, while Uninet does have a solution for fixed assets based on a project idea, that is a session that is coming up later on today. So I suggest if you're interested in that, you can certainly go to that session and learn a little bit about that. But we're going to assume for this demonstration that our fixed assets are depreciated outside of the system and done by a resulting journal entry. And we can show DCA the journal entries here. Just go into financials, list our journal entries, and we'll just list them for the period just so we could show DCAA the type of journal entries that we have put into the system. And here's our monthly depreciation entry. You can click into that and also show them that this entry itself, while a standard entry, is set up for multiple occurrences. So once this entry has been posted for the month, the next entry will come up on our on our screen as an in-use entry. So it's a reoccurring entry, basically, is what that is. Okay, let's go back to the next slide.
All right, that's question one, the easy one, the accordance with GAAP. Now let's get into the cost accounting aspects of the accounting system. And the first one, segregation of direct costs from indirect costs. So John, what I'd like you to do is show me the trial balance. Let's talk through who would determine direct from indirect on common costs, your travel, consultants, et cetera. And then let's pick an entry from a travel account and trace it back to the supporting document so we can see for ourselves whether you properly classified it as direct or indirect.
Absolutely. So I've run some reports ahead of time just to make it easier as we go through our presentation here this morning. So I'm just going to list the trial balance. And the trial balance report I'm using is really just what it is. It's the trial balance, general ledger summary trial balance report on our general ledger reports here in our financial section. So let's go back to our general ledger, and we can demonstrate to DCAA that we have a logical setup of assets, liabilities, expenses, and our expenses are set up in accordance with various conventions, 80 being G&A, 90 being unallowable, 70 being overhead, etc. We also know that from setting up UNINET, and that's a roles-based system, that the determination of direct from indirect on common cost is number one, based on assignments. We cannot charge time or expenses to a project unless we have an assignment to that. And also it is configured during our system setup. So during system setup, we'll do some things such as setting up your expense types. And when we set up your expense types, what we'll do is we'll ask you to go through an expense type. In this case, let's call it materials. And I'm just going to listen to the cost accounts here. And for each project type, we could have a separate GL account where that expense would lie. So for example, in an admin account, a G&A project, let's call it, that cost would go to 800314 or a G&A general ledger item in our cost pool and in our P&L as well. For B&P, it's going to get recorded as B&P other cost. For billable project, materials are going to get picked up on our GL as direct materials and so forth. So at this point, we're going to trace something through the system. So I'm going to go into our unallowable travel, and we're going to trace an item here just because unallowable is usually pretty fun there. So let's go into unallowables, and we'll pick out any one of these. It's $150 of expenses. And what I'll do then is I'm going to run a separate report. And we're going to look at this point, if I go back to my general ledger, we can see on this item here, let's assume that the auditor has selected this item. For Charlene user, it's an expense report. We know that by the type of the transaction, it's EC, it's expense cost post. It's in period 10. And again, it's $150. So I'm going to look for Charlene user, her expense report of number 41. But the way I'm going to search for this is I'm going to use an expense status report. I'm going to show the locked, complete, extracted views, but I'm also going to show the detail views here because I want to see the approval history to show DCAA. I also want to see the attachments list. So I'm going to run that report, and we'll notice that the report, this is basically the roll-up level here. So this shows us, the high-level details. In this case, we're looking for voucher number 41, and the vouchers are set up in chronological order based upon the way they are here in voucher number. So I'm just going to scroll down to the bottom of the screen. Here we are, expense voucher 41. We can see our $150 here. It says entertainment, so pretty much as Pete said earlier, if it's fun, it's generally unallowable. And we can see it definitely was fun. It was a client celebration that we paid for. But we now know that we traced that from our unallowable account, so it has been properly classified as unallowable. We can detail the approval history of this expense report here. And also, because we listed the attachments that were on that expense report, we can bring those up for DCAA or the auditor so they can review those expenses and ensure that they match what was proposed or what was entered on that expense item.
Very good. All right, moving on to question 2. So now that we know we can segregate direct costs from indirect costs, can we accumulate direct costs by contract?
Okay, so what we're going to do is we're going to show a project cost summary for all projects. Now we know from our UNINET university classes and our training that we had for our consultant the project accounting reports, the PSRs in this area here, and summary reports. And I'm going to run basically a PSR to tie out the income statement. I'll just click on that right here, and we'll go into how I ran this. So this is a roll-up project cost summary report, and I made that option here within our reporting options to roll it up. But also you'll notice I want to include posted data only, because what we're going to do here is identify if this PSR roll-up of all our project costs actually matches and can be traced into our income statement. And the only way that that will happen is if we include posted data, because we know that to post data within Uninet, it has to be the result of a period close where you're doing a labor cost post and expense cost post, as well as your billing and revenue posts and finalizing your invoices. So I'm just going to run this report again, and we'll see our various buckets of costs. And this is for every project that's in the system as of this date. At the same time, what I'm going to do is I'm going to run an income statement for the same period. And we're just going to kind of tick and tie back and forth some of our costs. So in the case of direct labor, we have 525,086.83. And look at that, right there, our labor totals, 525,086.83. In the case of our ODCs, we know that we have $381,538.73 of ODCs, and we have those items here. And these items are broken down into their cost elements here on the project cost summary, and also into their counts here on the P&L. So we can also, if DCAA would like to sample some of these items, drill into an income statement right there and show them all of the details that make up this account balance.
Excellent, thank you. Now I accumulate cost by contract. We also have to accumulate indirect costs by contract. So can we allocate indirect costs to our intermediate and final cost objectives? For those playing home game, a final cost objective is also known as a contract. And we do this by looking at the statement of indirect rates and tying out the total.
Okay, awesome. So we will go and we'll run a statement of indirect rates. And like I said, I have some preset up here. Where you would run that is off our financial section, under the general ledger section, subsection, and the statement of indirect rates. But again, I do have one that is all put together here, so I'm just going to run that right now. And what you can show DCAA here is, or the auditor, is here are our P&L items, here are our direct costs by account number. And if they wanted to drill in to identify what makes up those costs, again, they could. But most importantly, we can see the breakdown between what are our pool costs, let's say fringe, and our base costs, same thing with overhead, and G&A. And as we can detail, the total fringe pool cost and total base cost will give us the resulting rate. Now, the one thing that they'll want to do, because we're assuming, as most of our clients, or many clients I've seen in the course of my career, that it's based on total cost input of G&A. So in that case, we'll notice we have one unallowable cost here. So if we took our grand total here of $658,871.55 and subtracted out that unallowable travel of $450, we would come up with a total amount of our pool and base cost of the G&A pool, which is where I'm at, where I'm in right now, G&A. If we add the $88,550.74 and the $569,870.81, we'd come up with a total of $658,422, which equals this amount. Now, again, another important note here on our schedule of statement of indirect rates is we have a column all the way to the right. This column that's called not used. And this is for any account that would be on our P&L that's not used within this calculation or any of these calculations. And in that case, we know that's $450, and we know that is our unallowable travel. Okay, and I think one other item we have been requested by our auditor is to assure that the rates on our PSR do equal the rates that are on our statement of indirects. So for this period, I'm going to run a PSR, and we're just going to tick and tie the rates in to the PSR itself. So let me go back to my reports here, and I have set up a PSR. Let me find it here. There we go, or JSR, depending what world you're coming from. And we're just going to look at the rates now. So one important note is when you're running a PSR to tie it into your statement of indirect rates, you want to be using actual rates, because the system is calculating the actual rates for us. That is what is on our statement of indirect rates. So for our fringe client site, we have a rate of 56.492% for the period. Here's our fringe column. is 56.492. Perfect. Let's go back, our overhead company site, 30.6805. We'll go back to our client site, and that is 30.6805. Perfect. And we'll go to our G&A rate of 15.5387. And we can see that we can prove that rate right back out here, our statement of indirect rates. Also of note, we also have facility service center, and note that 100% of those items have been allocated out into the system, into the other pools, the overhead and the G&A pool, per our calculation, per our indirect cost rate structure that we have been approved with by DCAA.
Thank you. And then the next part is all of these costs that we're accumulating under our contracts, are they also completely under general ledger control?
Yep. Okay, perfect. So let's go to the general ledger. And what I would do for this test is we could run the general ledger report if we wanted to again, but I'll run separate balance sheet and income statement because this way we can show the individual line items that kind of roll up into our financial statements. Now for the balance sheet, unfortunately, there's no drill down capabilities within Unit here. However, should DCA want to sample any of these accounts and see what makes them up, we would just run a separate report, which would be our GL details report for whatever accounts they want to look at. For the income statement, we have a little bit more flexibility there. So let's go into our income statement. And again, we can see the accounts that roll up. We can also change the way the accounts look. So right now we're listing all the accounts individually. We can show different roll-ups if we wanted to, just to show how the financials roll up. We'll just keep that on our listing accounts individually so they can easily trace items back to the general ledger. And if we wanted to click into any one of these items to see what makes up that item, boom, there it is. We just click into that hyperlink and it takes us right to the details. Okay, so that basically proves that our financial statements and our general ledger tie together. So let's go into trace an individual item. And generally, what will happen is the auditor would look for something, maybe a financial item or something like that. So we'll take a look at our financials real quick and go to accounts payable and take a look for a vendor invoice. And again, we're just going to select all and look for our current period. And there's our highway software. And again, we could trace that back as we did before into this account 50-2401 using our general ledger details report and identify that within the GL. Now, the final portion of this test is do the totals of all account balances in the GL agree to the financial statements and project cost summary reports. We've demonstrated that before by using that rolled up PSR and tied out to the income statement. So we could definitely demonstrate that again if required by DCAA or by our general auditor. Yep. So
ironically enough, with all the focus on timekeeping and labor distribution, you would think that that would be the #1 question on SF 1408, but it's actually question 2E and F. So what I'd like to see now, and I think you've already kind of showed this, but we'd like to kind of walk through it a little bit at a better pace here, is the labor distribution report tracing back to a timesheet and also verifying an employee's pay rate. And
certainly
how the changes based on the number of hours entered.
Absolutely. Okay, so the first item was to see the labor distribution report for the last month. So what I'm going to run is the people time details report for the prior month. And again, just the nature of time, just set that up ahead of time. And we're going to pick on Frank Controller again. He's for customer big data. He has, this 11 hours on his timesheet. We identified that back before. We can go there again real quick and just show his timesheet for that period. And again, here is his completed timesheet for 16 hours for that first period. And we trace that 1 hour there, and the other hour was on the timesheet for 16th to 31st. Now we can also see he has 33 hours in the second pay period of the month and 16 hours of the first pay period of the month. So if we go back to our report here, if we go back to our report, which is right here, our people time details report, we can see that he has 49 hours in total for a total cost of $13,000. Now, the other item was to recalculate that individual's effective hourly rate. So by effective hourly rate within UNINET, we're talking dilution. And dilution in our system here has been set up to either go up or down, which means for all salaried employees that are on a direct project or indirect project, the cost that is associated with that person on a project is a direct result of the calculation between the total hours they're supposed to work in a pay period and the hours they actually work in a pay period. So first I'm going to do is I'm going to run a report. And the report is just to show one person. And again, we're going to pick on Frank Controller here. And we can see he has, in this first time period, because dilution is based on a per timesheet or time period basis for the hours that you worked in that period. So he's worked 16 hours, and his total cost is $6,500. Now, obviously, we can see if we take the 6,500 divided by 16, it's going to come up with a 406.25, which is a very nice cost rate. But we want to identify why that cost rate is happening as such. So I'm going to go into a people profile. I'm going to go into his person profile. And as we know, dilution is set up within the system to go automatically once a timesheet has been locked and extracted. But what does that really mean? So under the person profile, I'm going to go into his dilution item right here. And this will show us for each pay period, for each timesheet period, the amount of hours that he's actually worked and the amount of hours in the period that he's supposed to work. So if we took this 86.667 hours in the period divided by the 16 hours work, we'd come up with a cost rate factor of 5.41666,875. But what does that mean? Well, if we take that 5.41666,875 and multiply that by his actual salary rate of $75 an hour, we would come up with our $406 and 2.25016 cost per hour, as indicated on our effective hourly rate.
Excellent. All right, sticking with these two steps here, going back to labor distribution, can we actually pick a total direct labor cost for one contract and roll it up to the PSR? And then can we pick an indirect labor cost item and roll that to the general ledger?
Absolutely. Let's go back and I'll just go to some pre-setup reports that I have. So what we're going to do first is look at our project labor cost for one project. And we're going to look at, this is the big data project again, once again. And for this period, we have a total of $45,134.61. If I go back and I run a PSR report for this contract for this period, we can see we have a total labor cost of $45,984.69. And we can also drill down into here into labor detail actuals to identify what makes up those amounts. Okay, and then we also trace an indirect cost item to the general ledger. All right, let's do that. Again, I'm going to set up reports again. And all I did was show a vacation item. So I went into our vacation project and identified, okay, Charlie user on 2/2 has 8 hours of vacation of $280. Sounds reasonable. Let's go over and let's take a look at our general ledger. So if I go into the general ledger right now, my paid time off account is my expense account. We can see it's a fringe item, so we know it's the right account. We can see it's a labor cost post for user Charlie. We record 8 hours, $280 on February 4th.
All right. Now we have to go into the more detailed steps here. Interim determination of cost charged to a contract through routine posting of books to account. Basically, is there a monthly closing process? How do the accruals, depreciation, revenues get recorded? And do we do the exact same thing that we've been doing, but just for a current period?
Okay, perfect. So the first item is their monthly closing process. Now, we know from experience, just as accountants, we should have a monthly closing process, and most companies would have a checklist of some sort or an accounting binder that they use. But what we have in UNET that we have put together for you to help you in closing the books for the system for the month or for a fiscal end period is a list of the procedures. And what you can do is incorporate these within your checklist or within your monthly processes. These shouldn't be your only processes, but these are the system generated, or not the system processes that you must do to close your books within the system. But you would also show these to DCAA, perhaps maybe you have them again in a checklist. And if you hyperlink the checklist, you could detail exactly what procedures that you are following within there. But again, this should be also in accordance with your normal policies and procedures and your closing processes, perhaps in your accounting guide, your desk procedure, something like that. The next item was, are all accruals recorded? So we know from our earlier look through at our financials and our journal entries, we are making a bunch of different entries at the end of the month. Certainly not a significant amount, but just a few of the items that we need to. For instance, depreciation. Depreciation has not been calculated within the system. It's been taken offline by a downstream system, let's say, to calculate it for us, and we're just putting in our depreciation entry on a monthly basis. The same thing holds through with maybe reclass of wages, vacation accruals, things of that nature. Any other accruals would go in this way. For our revenues, the system will take care of accruing any and all revenues that we would have based upon our billings and our costs within the system and type of contract itself. Now, the final item for this test is, do current period expenses agree in total to the amounts recorded on the PSR? So we're talking current period now, versus prior we were looking, as Andy said, at the year in total. So let's take a look at our income statement here. And you'll notice I ran an income statement that is a little bit different, looks a little bit different than the other one. We have another column here, period to date. And the way I got that was I went into an income statement, just to run that real quick. But also what I want to do, I clicked on this column option to show the period to date and year to date actuals. This is what actually gives us that other column. So now we can see what has actually happened during this period and how it is reflected for the full year. So what I'm going to do now is just run a PSR or JSR, as you might call it, for that period. And we're just going to compare that to the income statement. So again, our labor total, and this again is a rolled up PSR. So I just kind of rolled up the selected accounts into a single block, and I included the posted date only because, again, we're trying to tie to our income statement, and I'm going to prove that we tie to our income statement. So our labor total is $281,400.36. For the period, on our income statement, direct labor is $281,400.36. As far as our total ODCs, we have $10,017.87. And again, we've traced those to $10,017.87. And we can see the breakout of these items here, as well as by cost element on our PSR. And if DCAA or our internal auditors would want to take a look and see what makes up those costs, you can certainly drill down like we can in any income statement and identify what costs make up those items on our general ledger.
Excellent. Everybody's favorite one, can you segregate unallowable costs? One, do you have a process for it? And two, is your GL designed to do it? And can you just walk through kind of how you would recommend doing that in Unit?
Certainly. Okay, so the way I would demonstrate that to our auditors would be, again, to look at a reference report. And the reference report I would look at is the account reviews in our financial section here. And I'll just run that report, and we'll just expand all just because it's easier than cherry picking the section we want. And being a good Unit user, we know that if we go all the way to the bottom in our 90 dot section is all our unallowable accounts right here. Unallowable expenses, labor, travel, any other unallowable items that we have there. Now, to make a sample, I'm just going to make an assumption here that our auditor has requested an unallowable item, and the unallowable item is a travel item of right here, this $150, which is an unallowable item. So if I click on that item, we can see that it is, again, for Charlene user, for expense report number 156, and it's $150. So let's kind of tick over there, and we'll go into our status report, expense report, status report, and we're going to say we're just going to look for user real quick, and we want to see Charlene user, and we're going to look at a detailed view because we want to see the approval and the attachments again. And we're going to look at locked and extracted because we know this expense report has already been done. Okay, so now we have our view, our rolled up view, so to speak, and we only have one voucher here for this period. It's the voucher we're looking for, expense number 156 voucher. And if we go down to the details here, here's our entertainment cost. Here's our entertainment cost of $150, which we saw before, and also we can see who approved it, and again the attachments that are related to that. Now, the other question was, do we provide bonuses or severance? And this goes back to what our policies and procedures are in some ways. So if we do provide bonus and severance, we should be following those procedures, and they should be written down, as Pete said earlier, and practice what you preach. If you say it, you should be doing it, because that's what DCA, any auditor will audit to. It'll be your policies and procedures. But the way we can kind of show that we do have those accounts or have those items within our company's purview, and we are in accordance with our policies and procedures, I would just look to some certain accounts to make sure that we have those set up. So in our fringe section, we have severance pay set up. We do pay severance pay, and that's in accordance, again, with our policies and procedures. For overhead, we have overhead bonuses. We're paying bonuses out for overhead folks in accordance, again, with our policies and procedures and our bonus policy, which is extremely important. Another item is the G&A bonus. So again, we're segregating those by our cost elements, our type of costs, so that it can be properly reflected in our statement of indirects and our cost structures.
All right, and then really the last major thing for our examination here is the identification of costs, not just by contract but by CLIN.
Okay, perfect. So what we can do here, we've seen PSRs before, and we've seen them rolled up. We've seen them by project, but sometimes you have a project that is based upon tasks or CLINs, and UNINET can definitely handle those items. So what we're going to do first is we're going to show a PSR or JSR by task. And here is, again, we just picked Project Big Data just because it's easy, it's there. And now where I ran the PSR was right here in our task options to show the tasks for the current period. So that way, the system knows to break out this project by its tasks that are set up within the system. Now, one thing we can also do is go back and identify our funding status on the CLIN. So right here, for our task or CLIN, however you want to refer to it as, is number one, research and analysis. We're showing a funded value of $15,000. For our second CLIN or task, design, we're showing a funded value of $10,000. And you'll also notice we have the date range for these tasks or CLINs. Now, in this case, they happen to be different. And the reason they're different is because the work performed on that task is different. So we can prove within UNINET that we can tailor these CLINs to whatever the contract dictates might require. But the other item is to identify in the contract itself that these are the actual items that are budgeted toward. So let's take a look real quick at our tasks. So I just went to a project profile for this project, Big Data, and we're going to go into our tasks. And our funded value is in the accounting tab, and we can see for task one, it's $15,000. We go back to our PSR, it's $15,000. Again, we can go into task two, and we knew that was $10,000 that was funded. And again, that's our $10,000 funded value. And you'll also notice these checkboxes are checked. We're going to limit the billing to the funded value. That way we're maintaining control of our system, and we're not going to overbill any customer, whether it be government customer or commercial customer.
Excellent. The next, the question 2J on SF 1408 really refers more to production type entities, which most people and most people that we work with, service providers. But the question would be, can you segregate pre-production costs from production costs? And John, no need to demonstrate, but I think when we talk about it, we say really you do that just through kind of the trial balance account structure that you have.
Exactly. Okay.
So now that we've gotten all of the meat and potatoes of the system checked off, the last little pieces here are, now that we've seen the accounting system, can it provide financial information required by contract clauses considering limitation of costs and payments, and can it support progress payments?
Okay.
Basically, let's take a look at those contract information modules, how you manage that.
Okay, perfect. So just to note, we can make partial payments within UNINET, whether it be request for a partial payment from the government or the customer, as well as for accounts payable. So those are totally customizable within the system. Let's go to our customer here. Again, we're going to go to Big Data Project. I'm going to go into the project profile. So the question is, can you add contract value, funding value, rate ceilings, and other limitations? First tab I would kind of walk through would be the budget tab. And this is where we'd set up our internal budgets for revenue, bill dollars, as well as our cost and burden cost. And we'll notice the bill dollars of labor is 800,000, bill dollars of expenses of 400,000. So that's $1.2 million. And if we go into our accounting tab next, this is where we'd actually set up our total value of the project, which is in this case $1.2 million. So we tied there. But also we'll notice our funded value is only $1 million. So in this case, we're incrementally funded. And to halt us, so to speak, have the system halt us from overcharging, potentially overcharging the customer, we've limited our billing to the funded value less fixed fee. And what will happen is if we get to a point where we're going to go over on invoice, over this funded value, the system itself will pull the overage into what we call funded value adjustments. And those sit on our P&L as items on the P&L in a separate category. And when we receive the funding, so if we're not working at risk anymore, we have funding to go forward to the full $1.2 million. Those items that were limited will then be pulled into our next invoice and be able to be billed in accordance with contract requirements. Now also, if we were going to have, let's say, a rate ceiling, so we have a cap on G&A or a cap on overhead or something like that, that will be built into our cost structure, which is configured as you're configuring your system or as you're going along. And if you are in a case where you may need some help to set that up, you certainly look at our a knowledge center, and there would be a bunch of material in there to do that. Now, what the auditor might also want to see is, okay, well, I see these funded values here. I see the total value. Where in the contract can I see that? And in that case, I would use the notes section. And this is one of the sections that is very, very useful, and it will keep this information handy. I would just have a project note set in here, and I don't have it here because I don't have a contract document for this item. But I would set up, your contract award, let's say, or any modifications as separate notes in here, and you could actually describe the reasoning for, let's say, the modification if there was one, and we can attach the actual contract document in here. So if you were questioned by an auditor, well, why is this $1.2 million? I thought the contract was only for $1.1 million. Well, we can go into our notes, pull up that actual contract or modification, and prove to them that the total value should be $1.2 million in accordance with the contract provisions.
All right, thank you, John. One of the last questions there is whether the accounting system is designed and records maintained that allow reliable data to follow-on acquisition. Well, if you've passed the rest of the examination so far, you passed this requirement. Last but not least, is the accounting system in full operation? So, as an auditor, DCAA auditor or otherwise, you cannot give a fully clean opinion if you cannot see that the entire system is being operated. But the rest of the system can be audited if one component is not yet implemented, and then you can always do a follow-on examination later. CPAs do that as well. When we're completing the actual examination, you can receive one of three types of reports: pass with exceptions, which is where you would have that follow-on examination, or fail. Independent CPAs will typically never issue you anything other than a clean pass opinion, and what they would do is kind of counsel you into how to get that clean opinion if you're not failing. So I've had several clients where we come in, look at March isn't so good, and so we give them some pointers on how to make it better. We come in, we look at May, and by that point in time, they've gotten everything they've needed in place to pass the accounting system certification. Once certified, you retain that status until a material change occurs. A material change, what I say, anything DCAA wants it to be, but typically it's a change in accounting software or a change in personnel and procedures, or in your cost accounting structure or your indirect rate structure. And sometimes contracting officers can just say that a report dated from 2012, 2013, that's outdated and you have to get a new one. And then Pete, if you want to wrap us up.
Yeah, thanks, Andy, and thanks, John. That was really great. Some good detailed information. We can also provide, upon request, copies of example policies and procedures that we provide for our clients. We're happy to give those out to the attendees of this conference. We provide, as I mentioned earlier, the FAR 31 unallowable cost checklist and the process control questionnaire that kind of guides the clients on what we'll be looking at. And if you've got Uninet, a lot of that's going to be self-explanatory and reference the system. So that's really a good tool for everyone. We'll go into the Q&A if there's any questions. I just like to sum up to say that having a system like Uninet really makes our life easier as we're doing the accounting system audit. We've had quite a few clients convert from QuickBooks or even Deltek into Uninet and have asked for the accounting system audit. And frankly, we had a great luck in getting those done in short time just because the system is so user-friendly. The other thing I tell our clients who have converted is to take some time to make sure everything's working properly, functioning. So if you implement effective January 1, we're not going to come out there January 5th. Give it a couple months to make sure everything's running smoothly. 2 to 3 months. But once you've got the system down and the process is working, we can come out there and do that accounting system audit in short order. But just a quick background. I'm Pete Rigoni. I'm an audit partner with SC&H. We have offices in Tysons Corner, Columbia, and Baltimore. Most of our clients are government contractors, so we help them with the things as system implementation guidelines, choosing the appropriate accounting system package, doing the accounting system audits, FAR, CAS, matters, incurred cost submissions, and we can say Uninet definitely is a great system in dealing with the DCAA for any of those matters. And Andy, if you'd like to talk briefly about yourself real quick. And
thank you. Yeah, so I've been with SC&H for 9 years. I'm a homegrown SC&Her, and I'm also an accounting professor at American University. I've been learning the government contracting space for the last 9 years, and look forward to continuing to do so.
Thank you. And John, if you'd like a quick blurb on your role at Uninet.
Sure. Thanks, Pete. Yes, I've been at Uninet for over a year now, but I came to Uninet from being a customer of Uninet prior to that. So I've had several years experience in Uninet prior to coming to Uninet, if that makes sense. And also, I've been in the GovCon industry for the last 10 years in various roles of auditors, assistant controller, and controller roles. So I have a good deal of experience with working with DCAA and other outside auditors in regards to these items as well.
Thank you, John. Well, that ends our presentation for this morning. If anyone has any follow-up questions or would like to just discuss in more detail, feel free to come up afterwards or contact me or Andy or John directly, and we'll provide your contact information separately. Thank you all.